Hello everyone, and thank you for joining today's webinar, Canadian Automotive Market Update. My name is Maisa Cubia, B2B Marketing Manager here at AutoTrader.ca, and I will be your moderator for today's airing. We have a few housekeeping notes to address before we begin. Firstly, to ensure you can hear the audio transmission, please enable computer audio through the prompt in the GoToWebinar platform and turn up your computer speakers or plug in your headphones. As we progress through the webinar, please leave any questions you may have for our presenter in the question box on the right-hand side of your screen. We will address your questions just prior to the close of today's session. Now, I'd like to introduce to you our speaker, Baris Akreyuk, Vice President of Insights and Intelligence at AutoTrader. You may recognize Baris from his regular appearances in national media outlets, including Global News, CTV, and the Globe and Mail, where he shares some of the Canadian car shopper data, trends, and research you'll hear about today. Baris has over 10 years of experience in the Canadian automotive industry, analyzing insights and trends shaping the automotive sector to help you make more informed decisions. Baris, thank you for joining us today, and I'll hand over the mic to you.
Awesome. Thank you, Maisa. All right. Hello, everybody. Welcome to our second quarterly webinar of the year. Obviously, there's lots going on. We'll talk about what we see in the market, but the agenda is here. Probably if you have been to this webinar before, you won't be surprised. The framework stays the same. We'll look at the overall economy really briefly as to what's going on with the inflation and interest rates and car prices, high level, and then we'll move on to new and used sales, what we are seeing in the market so far on a year-to-date basis, and what our expectations are, which didn't really change much from the last time around. And if you remember back in the COVID days, there was a lot of conversation about inventory, and we have a view on what's going on with the inventory. Everything was going pretty well up until April, May-ish, and there are some changes in the inventory. We'll discuss that. So as you know, we usually try to present an analysis or research piece to inform you guys as to what's going on. And one of the key research surveys that we run on an annual basis is our EV research. We've been running it since 2022. We ask a lot of questions to our consumers as to what they think about EVs, whether they would buy one, what are the obstacles and motivators and mandates and whatnot. So our B2B team put together a quick summary of what's going on. So I'll walk you through that. And then lastly, we'll talk about the price index, as we always do, affordability, what we see in terms of monthly pricing, loan durations, car prices, affordability, and all that fun stuff. So with that, let's go to the infamous traffic light slide. Again, I'm not going to go through these one by one, but if you could again concentrate on the right side, which didn't really change much from the last time around. Things are still going okay. If you look at the economy as a whole from 30,000 feet, GDP growth is there. I read a lot of bank reports and I talk to a lot of economists, and based on what I hear and what I read, there's no expectation of recession this year, so which is obviously good news. Unemployment rate is a bit on the higher side. As you probably know, it was pretty low during peak COVID years, and then things have changed a little bit. So we've been around 7% in the last couple of months. Consumer sentiments improved, but on the other hand, when you look at borrowing costs from consumers' perspective, it's still high. The interest rates are still restrictive, and new and used car prices, which we'll talk about in more detail, they are pretty high as well. So things are going all right. No expectation of recession, at least in the short term, assuming that there are no major changes in the economy, obviously. And hopefully with the conversations around the the trade deal between US and Canada. Hopefully we'll have some sort of a resolution in the near future, and hopefully that's going to help with a clear picture as to what to expect, because right now, back and forth with these different tariffs and changing minds, it's obviously not good for anyone, including you guys, including us. So hopefully when that's over, things are gonna get better. But with that, let's jump right into new vehicle sales. So no big surprises here. As we all know, if you remember from Q1, the sales were pretty strong for new vehicles, and that continues. June was up by 5.3%. And if you look at the look at the data, and by the way, this data is from the Rosier. If we look at it on a year-to-date basis, we're at 5.6%. So this is above our expectations, which I'll talk about in the next slide. But the obvious reason for this is the tariffs, as we talked about in the last one, and in different forms in the last few months. Tariffs moved these sales, new car sales especially, pulled forward, quote unquote. That's the term that is being used. Why is that? Because there's consumers and the market has been expecting that there would be a price increase in, especially on new cars, because of the tariffs. But if you look at it at the aggregate level, again, we'll talk about it in more detail, that hasn't happened because of the built up inventories, which is good. But again, there are some changes on the inventory side for new vehicles. So going back to what I was telling you about the tariffs and the negotiations, hopefully that'll clarify relatively soon, and we'll start looking forward. But so far, things are going well. Now, that said, if you think about the second half of the year, so right now when we calculate the SAAR, the seasonal adjusted annual rate, we are sitting just around 2 million cars. Probably that's not sustainable. We may see some slowdown compared to the first half of the year. But again, our expectation is that, assuming that there's no major changes, assuming that there's a trade deal, the new car market is doing pretty well. No changes from the last time around. Our view is that still the market's going to be up by the end of 2025. Again, we've talked about the lost sales and the impact on the used car market, so I'm not going to regurgitate it again. But overall, our view is that the market's going to pick up on a year-over-year basis, and assuming that there's a deal with the US, assuming that there's no big recession in 2026, we expect to see that the growth will continue for new vehicles. Because if you look at this graph, up until 2019, we were sitting around 2 million cars, give or take, right? And the population has increased by quite a bit. So we will go back to 2 million car units soon. All right, but that said, so obviously, so if you look at the top of the graph, I just named it as a no tariff scenario, but there's no such thing. Obviously, tariffs have gone through. But on the other hand, when you look at the market, when I talk to people, when I read other industry analyst opinions, they're all over the place. Everybody's trying to forecast what's going to happen with new car sales, and believe it or not, I've heard minus 25% on a year-over-year basis. I've heard flat. I've heard it all. So, and to be perfectly honest with you, I don't think anyone knows, because of the situation is pretty complex. And what I wanted to do is I wanted to show you a relatively simple scenario analysis that we read. It's not super sophisticated, it's not machine learning, but I'll walk you through it, and you'll see how we think about it. So we've talked about the 2.2% increase. That's the normal, in a normal scenario, that's what we would expect. But on the other hand, obviously that's not the case. So what we did was we went back to the peak COVID year, which is obviously 2020. And in 2020, New car sales went down by almost 20%, 19.4%, 19.6%, something like that. So what I did was, okay, cool. So keep the first half of the year as it is. Let's assume that it's going to go really, really bad in the second half of the year, minus 20% every single year. What would we be looking at? It's minus 7.5%. I'm like, okay, that's pretty pessimistic. I don't think anyone is expecting to see a 20% decline for the rest of the year. So what I did was I removed a couple of outliers from the equation. In March and April, I believe the new car sales went down by 75% and 45%, something along those lines. So I'm like, remove those. Just let's look at it for the rest of the year to see how it's going to look like. And then that would be around flat, 0.4%. And if we averaged it out, we are looking at 1.8%. Below last year's level. So the range is plus 2.2 to minus 1.8. Again, I'm not really too worried about the accuracy of these numbers, but the range is probably is going to be somewhere around there. And assuming no major changes in the market, probably we are going to end up somewhere around there. So at the end of the day, the point of the slide is that probably it's not going to be that bad when it comes to new car sales. And again, assuming what happens in the trade negotiations, hopefully we're going to end up on the plus side. All right, used vehicle sales. What's going on with used car sales? Pretty much the similar story. So first half of the first quarter was pretty strong, 2.8% on a year-over-year basis. Q2, we saw a little bit of a softening compared to the first quarter, ended up at 1.3%. And on a year-to-date basis, looking at the data, we are at 2%. So looking at July, I mean, we still have a week to go, so this is not conclusive at all. But July has been going pretty well as well. So right now we are seeing a 3.6% increase on a year-over-year basis for month to date. Again, this might change a little bit slightly, but probably it's going to be another positive month for used car sales. That said, if you remember if you joined us last time around, we look at the data by prime versus subprime, and the prime sales, prime consumers are still doing pretty well. If you look at the bottom left graph, they're doing okay. But on the other hand, subprime is a different story. It's been pretty flat in the last quite a few months and below both 2023 and 2024 levels. So what happens when the demand is high, and we'll talk about the supply in the next couple of slides, right? Prices have started to react. I believe I had mentioned that, in March, typically we, usually car prices start on the higher side and they come down throughout the year. But in March, we saw that reversal because of the increased demand with the anticipation of the increase in prices because of these tariffs. So that trend continues. And again, we will talk about that in more detail. So when we look at our forecast, this didn't change from the last time we spoke. We are sitting around 2%. Our expectation is around 2.5% for the year. And again, just like the new vehicle forecast, 2020, we have high expectations from 2026, assuming that the market normalizes and we'll go back to pre-COVID levels. And when we put everything together, both new and used, the market's been going up for since beginning of 2023, and we expect that to continue. All right, inventory overview. So we made some changes to these to the upcoming couple of slides. If you remember, I used to discuss the absolute volume of inventory on AutoTrader.ca. But on the other hand, some of the business changes that we observed, probably a normalized view would have been a better way of approaching it. So we've changed how we want to show inventory levels going forward. So what we did was we did this quote unquote same store analysis. So if a dealership has been with us for continuously for 2 years. We included them in this group, and then what we did was, okay, so let's bucket these new and used dealerships. They've been with us for at least 2 years continuously. Let's look at their inventory per dealer to normalize for the ebbs and flows that we see internally for our business. So with that, jumping over to new car inventory per dealer, again, this is the same store analysis. If you look at this graph, it's we are below last year's levels now. And if you concentrate on the first half of the year, first quarter, it's been what, at some point we hit 120 cars on average. But if you look at in the last whatever couple of months, that trend has been has declined. Why is that? A couple of obvious ones, couple of not so obvious ones. Number one, obviously, as we talked about in the first couple of slides, the new car sales have been doing really, really well. When there are more new car sales are sold, obviously that depletes your depletes the inventory. So that's number one. Number two, because of the tariffs, there's certain brands that are getting impacted in terms of availability. So for example, the BMW X Series, Mazda CX-50, these guys were the two relatively earlier ones, but I know that there are a couple more that were announced. So when these cars are not coming back to Canada, obviously that also impacts the market. Market is complex and uncertain. Obviously, I attest to that. There's lots going on. We work with a couple of vendors, and they do forecasts, and they say that they used to run these forecasts every quarter, but now because of the uncertainty, they run it on a weekly basis. So market is complex, market is uncertain, and therefore what we've heard from you guys, some of you guys, is that because of that, you based your orders on 2024, or you were a little hesitant in terms of getting more vehicles on the lot. So that also has an impact on what you're looking at. And lastly, when we look at the production levels in North America, they're expected to be down by around 6% as of April 2025. So obviously, fewer cars manufactured, fewer cars will make it to the fewer lots. What's going on with used inventory? All right, so this is also pretty complex, but looking at these graphs, you'll see that in the middle of last year there was this decline in inventory, both in absolute volumes as well as when we ran the same store analysis. Why is that? Again, going back to the first couple of slides, 1.5 million fewer cars were sold. These cars are not coming back to the market, and give or take just over 4 years had passed when COVID had started. So we had just started seeing the impact of these cars not getting sold. So the data shows a downward trend. It's picked up a little bit in the last 2-3 months. So lots of new cars are getting sold, and we know that around 50% of the time when a new car is sold, there's a used car attached to it, which is driving the increase in the inventory levels. That said, we are still below last year's levels. Again, maybe going back to Q1, I keep talking about this, but there's a direct correlation between how the Canadian dollar performs against the American dollar. And when it's lower, when it's weaker, we send a lot of cars down south. And because of the reciprocal tariffs, that's changed. That's also helping with the supply situation. And lastly, we've heard from some of you guys that you didn't want to take certain trade-ins because the trade-ins that were coming in, they weren't as desirable with higher mileage and older vehicles. Let's jump over to day supply. So no major changes from what we talked about last time around. So we are sitting at for 57 days for new. give or take, it's around, it's healthy-ish, and I like the fact that it's been going up again, as we've discussed the reasons in the last couple of slides. But that said, with the exception of peak COVID years, day supply is still pretty low compared to what 2020, 2019, and 2024. So that needs to pick up, because as we all know, when there are no cars, the market gets more nuanced. On the used side, again, there's a slight pickup. At least I think at some point we hit 35 or 36 days, but now it's picked up to around 41. So the pickup is good. But on the other hand, if you look at for the week, we're at our lowest day supply for used vehicles. One question I was presenting to an OEM yesterday, and one question came was around EVs, battery electric vehicle day supply. I put it in the copy there. For new BEVs, day supply sitting at 90.5 days. So it's pretty high compared to the rest of the market. And I'll talk to you about it, but obviously that's not a surprise. There's a decline in demand. That's been going on for a while, and also now with the federal mandates being suspended, obviously that's not helping, and which in turn cars are getting accumulated on the lots. So here's the day supply for new vehicles by OEM. I'm just gonna have a sip of water and let you look at your brands for a second. Yeah, so compared to the last time you looked at it at the end of Q1, no major changes. So if you look at the right side of the slide, you'll see that there are lots of domestic brands, a few luxury brands, and if you look at the left side of the graph, there are more mainstream brands. Why? These cars are getting sold, and therefore day supply is standing on the lower side. All right. So with that, let's jump over to our EV research. So as I've mentioned, the demand has been, declining. And so I have 2 slides to discuss here, but this is a very comprehensive survey that we've been running. We ask a lot of questions about obstacles, motivation, what motivates consumers to buy one, and all that stuff. So it's very detailed at the PHEV, HEV, and BEV level. So if you're interested in understanding it, please give one of us a shout, and we'd be more than happy to walk you through the entire deck. It's pretty comprehensive, as I said. But going back to this summary, if you look at the left side of the graph, you'll see that the demand, the purchase intention has been coming down for 3 years now. Started off at 68%, 56%, 46%. Now we are sitting at 42%. That's the question for that is, would you consider buying an EV as your next vehicle? That's been coming down. And why do they want to? For those who want to buy an EV, why is that? Fuel cost efficiency, 90%. Environmental friendliness is at 56%, and low maintenance is at 52%. These don't usually change. I think the fuel cost efficiency, number of consumers who stated this has increased a little bit. And if you think about what's happening in the economy, that is not surprising. And same goes for people who are not considering buying an EV. Why is that? Range anxiety, that hasn't gone away. So this has been the highest one since we've started doing this survey. It's sitting at 78% now. The second one, higher purchase cost, 69%. I believe that was the third highest reason last year. And the lack of charging availability, 68%. So we've been talking about this, the decline in interest and intentions, and for quite a while. And consumers keep telling us the same things. I'm anxious about the range. I don't want to pay as much money, and whenever I want to charge my car, I want to charge my car. So these findings don't change, but unfortunately, the way that how we deal with this, that doesn't change either. We know that these are the issues, but we don't seem to be doing anything about them, which is a bit strange. And if anything, going back to the removal of the federal incentives in the beginning of January 12th, I believe, right? This doesn't really help. This actually makes things worse, and cars get more and more expensive. So it's a bit confusing, to be honest with you. Consumers are talking about these things, but we don't really help them, and we just make things worse for them, and we expect to hit these mandates and targets. So we don't know how we're going to be able to hit these targets, and that's exactly what we heard from our consumers too. 75% of the consumers stated that they don't really think that we'll be able to hit these mandates by 2026, 2030, and 2035. Not surprising. And also the IZEV funding pause will play a big role, and I will talk about it. Maybe I should talk about it right now, but last year EV sales were pretty strong, and we discussed it in this forum and a couple other forums that it was coming, it was due to the increase in sales from Quebec. Quebec announced in the middle of last year that they were going to be making some changes to their provincial incentive program. And then obviously those consumers who were on the sidelines, they started buying EVs. So in Q4, in Quebec, BEV sales went up by 124% on a year-over-year basis. And when we look at the data for the entire year, when we remove Quebec from the equation, the increase in BEV sales is actually below that of the overall new car sale increase. So it was driven by Quebec mostly. And again, I don't want to say I told you so, but we keep talking about the fact that, you know, this is not sustainable. If we don't do anything about these incentives, sales would go down. We looked at the data internationally, and we saw in Germany that they went through the same thing by the end of 2023. And the following year, in 2024, their sales went down by around 30%, 20, 27, 28%, something like that. And we said that, yep, that would happen. And guess what's happening in Canada? In March, EV BEV sales, I think they were down by 44%. And in April, they were down by around 29%. So Q1 in Quebec only is down by 51% alone. And again, I know that I'm repeating myself, but if there are no changes in these incentives and these programs, it is probably almost impossible to hit the targets that we currently have. But that said, there's certain segments within the EVs, they're doing all right. Plug-in hybrids and hybrids, there's still interest in them. But the BEV interest for those people who want to buy an EV, BEV is pretty stable at 50%. When it comes to brands, Tesla is has the highest brand awareness. It came down by quite a bit. I think we were sitting around 74% last year, if I'm not mistaken. Now we're at 65%. Hopefully that is not a surprise to hear because of what's going on politically down south. Toyota came the second, and Hyundai was the third brand in our survey. All right, now let's talk about prices. Average new car prices, they are down by 3.5%. No big changes in prices. They've been around 64, 65 grand levels for a while. And so far in July, this trend did not change. So it's still pretty stable. On the other side, on the used car side, things are very different. I know that this graph is not easy to read, but thanks to my analyst Riaz, he put this animation together that shows the increase in used car prices a bit more clearly. So as you see, right, again, prices start on the higher side, they come down throughout the year, but because of what we are seeing in terms of the supply challenges and increase in demand, used car prices started to pick up. What's going on with what's going on with EV prices? New is down by almost 10%, used is down by almost 8%. Again, I don't want to spend too much time on this. We've talked about it. This is not a big surprise. There's less demand, and the prices are reacting accordingly. Looking at the market, the used car market by used car prices by luxury versus mainstream, both have picked up a little bit. But if you look at the luxury, the blue line, you will see that it picked up at a bit faster pace. And when we look at the market, we see that both mainstream and luxury brands are doing pretty well in terms of overall sales figures. But in percentage terms, luxury used vehicles vehicle sales were pretty decent in the first half of the year. As such, the increase in luxury prices. Affordability, again, pricing is one part of the equation, but obviously we need to take the salaries into consideration. They came down a little bit. This data, there's a little bit of a delay because StatScan is, as always, there's a little bit of lag with the data that comes out from StatScan. So 50 weeks, it would take 50 weeks to buy a new vehicle if you spend all your money on a new car, and 29 weeks for use. So there's still 11 and 13% respectively higher than what it used to be back in COVID. And we'll see what happens with the rest of the year. Interest rates, no big changes from the last time around. They came down a bit, but they are still, compared to even 2022, they're still a bit on the higher side. Same situation for new vehicles, down by 1.7%, and the decline is coming from subvented deals. And what we did was we did the analysis. We looked at the availability, inventory availability, and interest rates. And those OEMs, those brands that have higher availability on the lots, they obviously provide more incentives to sell cars. Car payments, no big changes. It's picked up in the last couple of months because, as we've talked about, car prices are higher, 35% more compared to 2019. Not only that, but also the loan terms have increased from 68 months to 72 months. So how are consumers paying for these? For these vehicles, they pay for longer and they pay higher on a monthly basis. I'm not going to regurgitate these numbers. I think I'm slightly behind. So no changes. It's still same story. Higher payments and longer car loan terms for new as well. And lastly, as we always do, we try to summarize it. Summarize what we've discussed. Supply is a challenge so far. This was a bit challenging last time we spoke, and now new joined the party because of all these tariffs. And hopefully by the end of the month or August 1st, there's this date's been floating around. So hopefully when we have a deal, at least on the new side, there's going to be some improvement in availability. Demand is there. New and used, we discussed a couple of different scenarios for new. Again, I don't think, even if it gets really, really bad, I don't think it's going to be a bad year for annually. But on the other hand, and used, we don't really have big concerns around used at all. They have been pretty strong, and we don't expect that to change. Pricing, again, no tariff scenario. If there's no tariffs, probably we'll start seeing some impact in new sometime down the line. By how much? Again, just like the sales forecast, I've heard a lot of numbers, a lot of dollar signs. So I'm not going to provide a number per se, but I think it's inevitable that there will be some increase in new car prices if this thing hasn't been resolved. So with that, I think I'm late for a couple of minutes. I'll just go back to Mesa and see if there are any questions.
Thank you, Baris. Before we wrap, we have a few questions from our webinar attendees. The first question from the audience is, what impact would a soon-to-be announced US-Canada trade agreement have on the Canadian new and used car markets?
Whoa, I hope we have half an hour to talk about this, but how do we summarize this? So obviously, maybe before even think about the supply and demand and prices, let's think about the intangible factor. I think it's going to be good because we'll be able to see what's around the corner. That's obviously not the case nowadays. There's always ifs, there's different scenarios, there's confusion. Do I like, even for resources, like going back to the inflation argument, right? Like why, when the inflation was high, why did we want to bring the inflation back to 2 to 3% levels? Because then businesses can actually plan ahead. Okay, this is going to cost me 2% more, then I'll be able to hire, do this, I'll be able to order this many cars, whatever the case may be. Right now, that's not the case. So I think the biggest, when we have a deal with the United States, I think that's going to be the biggest thing. It's going to be over if it's 15%, 20%, whatever the percentage is, but at least we'll be able to see what's around the corner. But when it comes to like more, micro drivers, probably inventory, new car inventory is gonna improve a little bit. As we saw, there was a little bit of a decline. Probably that's gonna improve. Used, I don't see a big change in used vehicle inventories because, going back to what I said, when the dollar is low against the American dollar, we send a lot of cars down south. So if the reciprocal tariffs would go away, probably that would reverse, and then we would start sending more cars down to the US, which wouldn't be good for the inventory situation. So that would be that. But in terms of demand, again, as consumers, just like we discussed the businesses, that they'll be able to see what's around the corner, but same goes for consumers. Am I going to have a job? How is the unemployment rate? Obviously, consumers in Gen Pop, they have a lot of question marks too. So that'll be good to be able to put it back in the rear mirror. So obviously it would be good, and the sooner it is, the better it is for everybody, both for consumers and dealerships and OEMs in the market.
Okay, so the second question is, you said that there was an increase in used car inventory. What type of cars are coming back to the market?
Good question. So the increase in used car inventory is coming mostly by franchise dealerships. And when we look at the type of vehicles, they're relatively on the younger side, 1 to 3 years old. So, and why would that be? As we talked about the increase in new car sales, right? 50% of the time there's a used car trade-in attached to a new car sale. So new car sales have been doing pretty well, and we are seeing a bit of an uptick in inventory. So that's the rule. That's number one. And number two, again, going back to the exporting that we talked about, because of the reciprocal tariffs, there are fewer cars going down south, therefore more cars are staying in Canada, improving the inventory situation.
The next question, I think I can take this one, Barish. Where can we find the recording of the webinar? So our marketing team will prepare follow-up communication to all webinar attendees in the upcoming week, which will provide access to a recording of today's airing. Next question, I think I can also take this. Where can I find the price index report? If you'd like to stay updated, follow us on LinkedIn or bookmark go.trader.ca/newsroom to get a copy of our freshly released AutoTrader price index reports, which we release at the start of each quarter throughout the year. By the way, everyone, just so you know, we're just a few days shy from releasing and distributing the latest AutoTrader price index report, so keep an eye out for that and make sure to download it. That wraps up today's session. If we didn't get a chance to answer your question live, rest assured we will follow up with you directly through email shortly. Thank you for taking the time out of your busy schedule to join us for today's webinar. As mentioned, we will be sending each of you a recording of today's webinar. For ongoing insights into data and trends driving the Canadian automotive sector, visit and bookmark go.trader.ca/newsroom or follow AutoTrader.ca on LinkedIn. We hope you join us for a future webinar airing. Thank you and have a great rest of your day.